Today in this video, we're going to talk about the top 4 reasons why your mortgage may be denied, why your mortgage application may be turned down. Check it out. Hi, I'm Rhonda Burgess, and I'm a real estate broker here in the Nashville, Tennessee area, and my firm is Southern Living Realty Partners, and I am a native Nashvillian. I want to talk about your mortgage application being denied. This was from the National Realtor Association for the top 4 reasons why mortgages are denied. First, debt to income ratio. 26% of applications were denied because of your debt to income ratio. I've talked about this before. You got to get your debt down. You got to get your debt down. You can't be carrying a lot of debt. Some type of way, you got to bring the debt down and or increase the income. Some type of way. And let's talk about your debt to income on your various loans. For instance, on an FHA loan, they normally don't like your debt to income to go over 41%. A lot of times on your conventional loans, they don't like your debt to go over 40%. Your VA and your USDA loans, your rural housing loans, are a little bit different because there's no fast and hard rule, okay? But normally, they don't like anything over 40, 41. I've seen some go as high, on FHA especially, I've seen some where if you got a very strong credit score, let's say you in the high 700s, 800, your debt to income may be a little bit high, especially with USDA. If your debt to income is high, but you got strong compensating factors, like you have a great credit score, you've been on your job for a while, the underwriting computer, the underwriting system, the computer actually underwrites your file. So the computer actually decides what the actual DTI is that it will tolerate. Okay? But 26% of all mortgage applications are being turned down because your debt to income is out of whack. So that's one thing that you need to work on, is getting your debt down as low as possible. The number 2 reason for mortgage denial is credit history. 24% of loan applicants were turned down because of their credit history. If you know your credit history jacked up, then what you got to do is you got to make a new history. You got to put some new stuff out there that look good and make you look good. If you know you was, look. In my 20s in college, see, I'm old. They came out, when we went to college, they had the little credit card people right there at the student union, or right there when you like finna go to the cafeteria, you finna go get something to eat. They had all the credit card people. Hey girl, hey, just because you're a student, you can get a free credit card. At one time, I had 21 credit cards. I used to could play like it was like a deck of cards with all these credit cards and stuff. But I was young and crazy then, okay? But when I decided I was gonna buy a house, I had to clean that up. You got to pay down, pay off, dispute, get that stuff cleaned up. And then you need to start developing some new credit. Get you a secured card. If the only thing you can get is a secured card, get you a secured card. Don't go over 30% utilization. Use it and pay it off. Use it and pay it off. You got to use it. All right, next, please subscribe to the channel if this is helping you. Hit a like. Let me know, if you want more videos like this. Let me tell you something. We're gonna swing back around on that credit and that DTI with this point right here. Did you know that FICO, the Fair Isaacs company, is coming out with FICO 10 this year in 2020? It is coming out in 2020, and they are expecting everybody's score to drop about 20 points off the rip. You didn't even do nothing. You didn't do nothing. We ain't done nothing. We ain't touched our credit. So like if you were sitting at a 600, you may be back in the 500s. You know what I'm saying? You close to a threshold that you need to get a mortgage, like you close to your 660, you close to 620, whatever, and it dropped 20 points. Then what you gonna do? This new credit score, they said it's gonna look at your last 24 months. So you will be hit harder for delinquencies, even if you just, 30 days late, even for delinquencies and high utilization. That goes back to that debt to income. Do you see how that debt to income is going to tag you twice? You carrying a high debt to income, so the underwriting model is not going to like that. Okay, so you liable to get denied for that. But then when this new FICO 10 come out, and they see you got high utilization, it's going to drop you on down some more. And you see how that when you get that lower credit score and that higher utilization, you bound to get denied. This is not going to work. This is not going to work. Get ready now. They done told you. They done put it out there. I got that from MSNBC or CNBC or somebody today. Today I saw that FICO 10 is coming out in 2020 and it's going to drop them scores about 20 points on average because it's looking at your last 24 months. If you on the verge right now, you better bust a move. Why these interest rates are still low? Because all it take is a little tick up in the interest rate and this FICO 10 to kick in, and it's going to make you completely ineligible. Some of y'all going to be blowed out the water and you not going to be nowhere near ready for another 18, 24 months if you don't do something right now. All right, the third reason for mortgage denial, incomplete applications at 17%. Get your affairs in order before you even apply. Go and find them W-2s. Some of y'all, you don't even know what your W-2s is from this year, and you just got them a week ago. Go and find your W-2s, get your check stubs, get your bank statements, get all your stuff in order. Because I'm just telling you, as a former underwriter, I may ask you for anything, and I can. Because I'm the underwriter, I have to check off certain things. I have to make sure that your loan is not going to go delinquent. So if I ask you I want a payment history of the last 12 months of you receiving child support for those of you who receive child support, or I want to see the last 12 months payment history for those of you who pay child support. Go on and get that. Don't be hollering, oh, they didn't want me to have it and they tripping and da. You know what? They not tripping. They not tripping. I want to make sure you telling me, okay, I want a birth certificate for that child that you're receiving child support for. Because I want to make sure you're going to be receiving it for at least the next 36 months. Why they want to see that? Oh, they trip. No, I want to make sure that you're going to be receiving this for at least 3 more years. Because if that baby's 17 years old in 6 months, I'm not going to include that income because that income finna cut off. It's not personal. This is the other thing that you need to realize. When the mortgage underwriters and your loan originators tell you the underwriter wants this, or the processor calls you and say the underwriter wants this and wants that, it's because, let me tell you how the underwriting game works. When I was an underwriter for a mortgage company, for a mortgage broker, first of all, okay? I'm not talking about when I work for the government. Well, I'm gonna get to that in a minute. But when I'm working for I'm at a bank. I'm at a Bank of America. I'm at a Regions, and I'm just telling you because I worked at Regions. I'm telling you from experience. They keep a running tally of how many of your loans go bad. And that comes back against you. That puts your job in jeopardy. When I was with a mortgage broker, and we had our own warehouse line, meaning I could originate a loan and underwrite it. Or one of my originators would bring in a loan and I would underwrite it. If I wanted to, I could fund that loan myself out of that warehouse line. I could just go to the warehouse line. Oh, you want to close on Tuesday? And the loan is for $200,000. Okay, fine, I go. I get the price and everything. I done took that out of my warehouse line. Let's say I only have my warehouse line is only $20 million. Okay. I done took out $200,000. But let me tell you what, if that loan goes bad, normally within the first 12 months, I got to eat it. That means my office got to buy that loan back because that loan went bad. So I'm just supposed to make an exception for you? I'm just supposed to make an exception for you when this is my money on the line. See, most underwriters are taught to think this is your money. This is your money. This is not the company's money. This is your money. Because see, when that's my branch, that's my mortgage office, I'm not finna eat that. I'm not finna eat that. Those of you in the insurance business, you know what I'm talking about. You don't want that cheeseburger. Y'all understand what I'm talking about. So finish your application. Get your stuff together ahead of time. Don't be tripping on this. And then don't be tripping because you sit up there and co-sign for your boyfriend's student loan and this fool ain't paying it and they looking at you. They giving you the side eye. And you like, oh, I can't believe they tripping like that. Dude, you obligated for that. And you know, at this point, don't nothing get rid of student loans but death. So don't get your stuff in line ahead of time and have it ready before they even ask you. But on that same tip, don't put extra in there. If I didn't ask you for it, don't put it in there. I can't tell you how many loans I have killed, especially on the government side. When I was with USDA and underwriting an FHA loan too, they would send in stuff that you ain't supposed to have in there. I'm gonna give you an example. Like a USDA, we had income limits. Okay. So I'm looking at the file. It say it's 2 people. Husband, wife, boyfriend, girlfriend. Okay, cool. They're telling me he makes $75,000 a year. He right at the limit. He right there, right? They tell me she don't work. So that's all the income in the household, $75,000. Okay, cool. Let me tell you what. I'm one of these people. You put something in front of me, I'm finna read it. I don't care. Look. I be all in the Kool-Aid. I'm just gonna tell you. I be like, I'm finna read everything. You gonna put a letter in there, whatever. I'm gonna I'm finna read it. Especially if it's a manual file, I'm gonna tell you what, the manual files, I'm gonna do them first thing in the morning when I'm fresh, when my eyeballs is fresh. I'm not doing no manual files or no, nothing crazy after lunch, because I'm over there like this. I'm over there nearly unconscious. But first thing in the morning, I'm fresh to death. So I'm finna read everything. So I'm looking at this file about thick like this, about 100-something, 200 pages. Ooh, the devil is alive. You think Rhonda ain't gonna read it. I'm just going through here. Why do I see some check stubs in here for Miss Thing? I can't tell you how many times I used to look around and think somebody was punking me because I just done seen some stupid stuff they done put in the file. And I'm like, I know these fools did not put this in the file. I know on the top sheet, you did not put that she don't work. I know you didn't put her on the application. I know you giving me all this stuff telling me she don't work. And just because it's page 157, you didn't think Rhonda was going to read it. And I get there and I'm looking at her paycheck stub like it's like, come on now. Come on. Don't put extra in there. But give the underwriter exactly what they asked for. Just give it exactly. Don't give me nothing else. Because you know what? When I got time on my hands, I'm going to start reading. And I'm dangerous when I start reading. And finally, the 4th reason for mortgage denial is insufficient collateral. 16%. That happens when you're buying a property that maybe you're trying to buy it for more than what it's really worth, because you done got your heart set on this piece of mess. Half the time it's a piece of mess and you get caught up in just, I just love this property, I just gotta have this property, and this property ain't worth the contract price. That's when you get blowed out for insufficient collateral. So just make sure, have your realtor do a good market analysis on the property. Don't go by Zillow. Again, subscribe to the channel if any of this has helped you. I know sometimes I go left, but I really be trying to tell y'all what the real deal is. Again, my name is Rhonda Burgess, and I am a real estate broker here in Nashville, Tennessee, and I'm a former mortgage underwriter, originator, processor, title processor. I done it all when it comes to mortgages, and I still deal with mortgages every day on a daily basis. If you need help with finding a home here in the Middle Tennessee area, I would love to work with you. My phone number is 615-554-0832. Please feel free to give me a call. If you want access to the Nashville MLS, please download the HomeScout app from your app store or your Play Store and use my VIP code 0832 to have access to the latest MLS listings. Again, subscribe to the channel as we will be adding more videos in the coming days all about your mortgage, how to get it done, how to just get in there.